present the final statement of accounts for the financial year 24-25. As we all know, REC is a Maharatna Government of India enterprise, and we fundamentally operate. We have three charters from the RBI. One is that of a public financial institution, one is that of an infrastructure finance company, and one is that of a non-banking finance company. So with these three mandates, we conduct our operations across the country with an emphasis on the power sector. The last year has been a very good year for the company, for the power sector. And I would just like to mention a few highlights here. We had a huge number of sanctions. We sanctioned projects with over 3.37 lakh crores. We disbursed out of these funds, we disbursed in excess of 2.07 crores. Our disbursements, which is the actual financial performance of the company, has shown an increase of over 18% on a year-on-year basis. Our focus on the RE sector continues. We had a very high disbursement in the RE sector. We went up to almost 27,000 crores, which is an increase of over 63% on a year-on-year basis. So our performance in the RE sector has been fairly, again, a huge improvement, considering the fact that in the last 3 years, REC has been moving from strength to strength to strength. To build up on a higher capital base is always a challenge, but in spite of that, it gives me great pleasure to announce that REC has recorded its highest ever annual profit of 15,713 crores, which is an increase of 12% on a year-on-year basis. The net worth of the company has gone up to 77,000 crores, 77,638 crores, which is an improvement over this, which is a growth of over 13% from last year. Our total income has grown up by over close to 20% to almost 56,000 crores. The net interest income has gone up to around 20,000 crores, which is a growth of over 27% compared to last year. Our NPAs have come down substantially. We are now at 0.38% as on 31st March 2025, and we hope to be a zero NPA company this year. Our yield on assets has also improved. It is now at around 10.05%. Our cost of funds is declining year on year. This year we have a cost of funds of almost 7.11%. Consequently, our spread is at around 2.94%, and our NIM, our net interest margin, stands at roughly 3.63%, which is again an improvement over last year. Our capital adequacy ratio, which is a very strong financial indicator of the strength of the company, is at 25.99%, almost 26%, as compared to the mandatory norm of just 15%. So as against 15%, our CARR is at almost 26%. The mandate in the Tier 1 capital is at 10%, and here our Tier 1 capital stands at 23.76%. So these are just a few indicators to show that the financial strength of the company is very, very sound, and we hope to build upon this extremely strong foundation and move on to greater strengths. Every year we give a good dividend to our stakeholders, and it gives me tremendous pleasure to announce that this year the final dividend that we are giving is at 18 rupees per share. So this year overall we will give around 4,713 crores as dividend to our stakeholders. In addition, we pay income tax to the government, and our income tax is also at around close to 3,800 crores, 3,791 crores. These indicators are in the overall perspective of the huge impetus that Government of India and specifically the Ministry of Power is giving in pushing the power sector across the country. A few indicators that show that how the power sector is evolving and evolving for the better. The legacy dues of generation and transmission companies, which stood at 1.34 lakh crores, have now come down to 25,000 crores in a short span of 3 years. Financial strength of our DISCOMs. In this, REC plays a very the role of a nodal agency. 19 states have been allocated to us, and it is our endeavor to ensure that the RDSS scheme is rolled out with full vigor and with full concentration in these 19 states. Yojana, which was launched in February 2014 for installation of the rooftop solar system. Again, here a lot of encouraging steps have happened, and there is a lot of movement on the ground, and we hope to see in the years to come both RDSS and the rooftop solar scheme push forward. Almost 51 lakh consumers have applied under the rooftop solar scheme against a target of 1 crore households, and we are hopeful that in the next 2 years, 2 to 3 years, we will push this scheme to ensure that the objectives of Government of India and specifically the Ministry of Power are met. Just for your information, all of you are already aware, but at the cost of repetition, I will say that REC continues to hold the highest domestic rating of AAA from internationally reputed agencies. Even our international rating is at par with the sovereign rating of India. We have been borrowing capital at very, very competitive rates, and it is a major objective to reduce our cost of funds so that we can pass on the maximum spread to our stakeholders. So we undertake to continue to do this. These results that I have placed before you today have been achieved despite very, very major challenges, including fluctuations in geopolitical events which we are seeing, as well as heightened competition from various quarters. All these makes the achievement slightly more pleasing to all of us, and I take this opportunity to thank the Board of Directors, my esteemed members on the Board of Directors. I take this opportunity to thank all the officers of the REC, the officers of the state government, the officers of CPSEs, all of whom have worked in a very synergistic manner to ensure that the power sector is pushed with the emphasis that it deserves. REC's achievements over the past 5 decades have been extremely good, and we continue to build upon this legacy of excellence and achievement. And I assure all the members here today, including our esteemed members from the press, that we will leave no stone unturned in ensuring that REC continues to perform and maybe go beyond what we have performed so far. I welcome all of you once again to this press meet, and I take this opportunity to thank the Honorable Minister of Power for giving us his valuable guidance, his support and his leadership. I take this opportunity to thank Secretary Ministry of Power as well as all my esteemed colleagues on the board who have been constantly guiding the efforts of REC. I also take this opportunity to thank my parent company, the PFC, for giving us directions and support in all our endeavors, all esteemed officials of the Ministry of Power, and to Government of India, lastly, on whose behalf we undertake our jobs. Thank you one and all, and welcome once again to this press meet. Thank you.
Leading to strong profitability. As CMD sir has told, we continue to be highly rated, highest rating in fact of AAA by all the 4 major credit rating agencies in India, that's CRISIL, ICRA, CARE and India Ratings. Internationally, we are at par with sovereign ratings of India by Moody's and Fitch. And we continue with the nodal agencies of the major flagship schemes of Government of India, such as RDSS, Saubhagya, Deen Dayal Upadhyay, and the most recently being the rooftop solar scheme. We have experienced and management team with the sector expertise.
I only drink this thing.
We continue to remain the government's trusted arm in major of the flagship schemes of Government of India, as I already told you. The Maharatna status is the highest coveted status that a PSU can enjoy, and in fact, we are only amongst the 14 PSUs who have been accorded this coveted status of Maharatna. This Maharatna status gives us higher greater operational and financial autonomy. It also allows us strategic investments by incorporating JVs, subsidiaries, and M&A activities in India and abroad. This all accelerates growth and supports government's vision for the power sector. In 2022, we forayed into infrastructure sector for nation's accelerated development. As a consequence, we can lend to metros, port waterways, airport, oil refineries, roads and highways, IT infra, fiber optics, steel infra, and also health sector. Just to give you a perspective of our shareholder outlook, we are majorly owned by the promoter, Power Finance Corporation. The foreign institutional investors hold 20.48% of REC as of 31st March. And in fact, they have reposed faith in REC continuously from the last so many years since IPO in 2008. The top 10 shareholders are also given in this presentation. This presentation is also available on the website of REC, and you can have a direct access to the presentation as well. As Sir has informed, we have today declared, the Board of Directors have today recommended a final dividend of ₹2.60, which is subject to the approvals of shareholder. By virtue of this final dividend, the total dividend for this financial year is 18 rupees on the face value of rupees 10 per share, which is 180%. And the earning per share of REC is rupees 59.55, and the book value per share is 294.84 as at 31st of March 2025. These all dividends are in addition to the bonus that we have been continuously giving to the shareholders, the most recent being 1:3 in August 2022. We have won various awards and accolades in all the spheres, be it risk management, accounting, corporate governance, and in fact, I am pleased to inform you that REC has been awarded the Gold Shield under the financial services sector, other than banking and insurance category, by Institute of Chartered Accountants of India for excellence in financial reporting for the financial year 23-24. Just to give you a brief about the operational performance of REC, we have sanctioned close to 3.37 lakh crores of projects. You can see in the 12 months of FY25, and the renewable sanctions have in fact risen to 1,05,000 crores in this 12-month 25. These robust sanctions across diversified disciplines create a strong order book which can help REC in future growth strategies. The disbursements for the 12 months, these are in fact the highest disbursements that REC has ever made in a financial year, and we have disbursed close to 1,91,000 crores in the entire financial year and nearly 45,000 crores in Q4 itself. These disbursements have grown at a total rate of 18% year on year, and the renewables specifically have grown at 63% year on year. The outstanding loan book, our outstanding loan book has increased by 11% to close to 5,67,000 crores, wherein 87% is held by the state governments and 13% is in the private sector. Our renewable loan book has also increased considerably from 38,971 crores to almost 58,000 crores, and the loan book has grown a considerable growth of 11% year on year. As already informed, we have pan-India presence, and we are lending across 26 states and union territories, as you can show in the graph, India map. I'll take you through to the asset quality of REC. The asset quality has continuously improved of REC, and in fact our gross NPA have reduced to 1.35% and the net NPA to 0.38% as of 31st of March 2025. I'm happy to inform you that in this financial year we have resolved 5 assets aggregating to outstanding loan of close to 6,000 crores during this current year, and in the last quarter we have resolved 2 assets itself. On the remaining NPAs, we have a high provision coverage ratio of around 72%, which has been constituted as per the expected credit loss methodology under Indian accounting standards. This table gives you a brief about the loan portfolio and the provisioning profile of REC. As you can see, there are no NPAs in the state sector that we fund, and which is in fact 87% portfolio that we have. Still, as per ECL methodology as per Ind AS, we have created a provision of 0.93% on these assets, and on the credit impaired assets of around 7,600 crores which are left in the kitty, about 72% provision has already been created. And just to remind you, these provisions are in addition to the reserves, statutory reserves as required by RBI and also as required by Income Tax Act of close to 14,000 crores of RBI and 842 crores as required under Income Tax Act. So we are fairly safe in those regards. We expect that the remaining resolutions will happen very quickly. And in fact, we are pursuing 11 projects under NCLT of close to 6,000 crores with 77% provisioning. And one project we are also pursuing outside NCLT of around 1,500 crores with 50% provisioning. Just to take you through the borrowing profile of REC, we continue to remain the highest rated as already informed you. The outstanding borrowing of REC has reached to 4,88,000 crore, which has borrowing across all the states. 33% of borrowings are from the foreign currency, and we have access to multiple sources of funding and a mix of international and domestic sources to meet the business growth. These foreign currency borrowings allow us to diversify our investor base and also simultaneously reduces the reliance on the domestic borrowings. We are only one of the 5 companies which are allowed to raise low-cost capital gain tax exemption bonds. Take you through the financial highlights of the company. As sir is informed, we have recorded the highest ever annual profit of close to 15,700 crores, which is a growth of 12% year on year. The total income has risen to close to 56,000 crores, an increase of 19%. The net interest income has grown phenomenally to 20,000 crores and a growth of almost 27%. The loan book has increased to the highest levels at 5.67 lakh crores, a growth of 11%. The net credit impaired assets have reduced to 0.38%, and the net worth has reached to its highest ever level at 77,600 crores. The capital adequacy ratio, which gives us impetus for future growth, is also comfortably placed at close to 26%. The key ratios, we have also improved on all the fares here. The yield on loan assets have improved to 10.05% in the 12-month period. The cost of funds have reduced to 7.11%. Consequent spread is now at 2.94%. The net interest margins have also improved to 3.63%. The return on net worth stands at 21.47%. And the interest coverage ratio, which is comfortable at 1.58 times, and the debt equity ratio of 6.29 times. This is the brief statement of profit and loss. As you can see, the profit after tax for the Q4 of FY25 is about 4,236 crores, and the 12 months stands at 15,700 crores. This statement contains the balance sheet position of REC, the assets and the liabilities. As you can see, the equity portion in the bottom half, about 77,600 crores is the net worth of REC as of 31st March 2025. I'll quickly take you through the ESG initiatives that REC has taken in the recent years. REC started its ESG policy in January 2023. From there, we have graduated a lot, and in most recently in January 2025, we have taken the stakeholders ESG assessment of the private borrowers and suppliers. We have been strategically lending for a sustainable future. Our 63% REC being the stepping stone has tailored its lending strategies to align with the nation's commitment towards harnessing clean and green energy sources. We have been funding to all the areas of renewables such as solar, wind, hybrid, large hydro, pump storage plants, biomass waste to energy, and others as well. Till date, we have supported projects of about 50,700 megawatt. Environmental, social and governance steps that we have taken. These all details are also available on the website of REC. These are the details of our investor resources. We will now take the Q&As. We'll keep it quickly, a brief short. And if you have any further queries beyond the queries that are answered today, we are happy to answer your queries on the emails or on the calls. The floor is now open for the Q&A space.